happening. But you couldn't say anything because Russia, bad. We can't even watch their hockey teams. All right. But what do you think happened next? As we were jumping up and down and talking about Winston Churchill. Well, smart foreigners, and there are some, believe it or not, started to dump the US dollar. Why? Because the US dollar was no longer a reliable store of value. Suddenly, it was a political weapon that could be wielded at will against anyone who held it. So what if you had a border dispute with one of your neighbors that the State Department hadn't authorized? Or what if you accidentally criticized transgender theology and irritated the Human Rights Campaign? Well, the US government might denounce you as immoral and then confiscate all your money, because they just did that with Russia. And as a result, dollars began to look much less appealing to the rest of the world. And so de-dollarization began, and it has accelerated at remarkable speed, almost without comment in the American media, over the last year. So Russia announced it will conduct business in Asia, Africa, and Latin America in Chinese currency. Brazil, which has a brand new government supported by the Biden administration, announced it will do the same thing. Brazil, largest economy in the hemisphere after ours. Pakistan is doing the same thing. That's a longtime U.S. ally. India and Malaysia, two of the biggest economies in the world, announced they'll be settling their trade in their own currencies, not the dollar. Even France, which we liberated, is using Chinese currency in a new liquefied natural gas trade. China and Saudi Arabia are now major business partners. And again, et cetera, et cetera, et cetera. This is happening around the world, and all of it is shutting out the US dollar. And it's happening a lot faster than anybody could have predicted. And yet no one in Washington seems aware that it is happening. So if you wanted the rest of the world to trust your currency, the last thing you would do is use it as a weapon or print too much of it. Printing too much of your currency causes inflation, and that saps the value of the currency. No one wants to hold a currency that is worth less consistently every year. That's sixth grade economics, but Joe Biden can't be bothered with that. So he's printing more money. Here he is last week announcing another $10 billion check. Not for you or East Palestine or anyone in our country who needs it, but for foreign governments.
Working in close cooperation with the United States Congress, we plan to add another $690 million for new funding for the presidential initiative over the next 2 years. And over the course of 3 years, my administration intends to work with Congress to commit $9.5 billion across all our efforts to advance democracy around the world. We're all safer when that occurs.
There are many problems in the modern housing market, but the biggest one for Americans tends to be the price.
Prices rose 40% from the start of the pandemic.
In the final quarter of 2022, the typical U.S. home sold for a record-shattering $468,000. That's unaffordable for most Americans, leaving them to rent.
The housing costs are completely out of line with wages.
Some members of Congress believe Wall Street is a part of the problem.
What's outrageous is your tax dollars are helping Wall Street buy up single-family homes. You're subsidizing Wall Street.
Massive private equity firms like Blackstone and Pradium Partners have backed a relatively new breed of homeowner, the corporation. This growing industry buys or builds single-family homes and then rents them out.
We hear from community organizers that are door knocking in certain neighborhoods and are just surprised by how many of the homes on a particular block will be owned by a corporate landlord.
Industry advocates say corporate landlords play a critical role in addressing the nationwide housing crisis.
What we have in housing in the United States is a chronic shortage since the financial crisis.
And so the question really is, how do we fill that gap? Is the answer incentivizing new housing development, new housing investment, new market participation?
What's behind? As of 2023, corporate landlords only command a small portion of the rental housing in this country. The vast majority of all rental units, including apartments, are owned by individual, small-time investors. But there's growing focus on single-family homes.
Institutions, large companies, only account for about 1% of all the rental housing in the United States and only about 2% of the single-family rental housing.
There's a small but mighty group of companies that lead the industry.
Hi, welcome back. It's Tisha Powell. Folks, do me a favor and hit that free like and free subscribe button. We'll bring you more breaking business news from New York, USA. Here are 3 things that we need to know. According to CoreLogics, 22% of single-family homes in the United States are now owned by Wall Street, and 1.6 million in rental. That's how much Wall Street is collecting. We still have hope here, guys. even though interest rate is 7%, guys and girls, what we need to do is start looking at townhomes. Go ahead and hit subscribe. We're going to have stuff about townhomes coming up. Townhome is $250,000. That's 3-bedroom, 2-bathroom, 1,300 square. We still can get in on that one. But as you can tell, the US dollar is dead or is dying. 32 trillion is what the United States owe today. 32 trillion. The average American owes 3 bad debt. We're not talking about mortgages. We're talking about a car payment. Average car payment is $32,000. Undergrad student loan, the average person owes $38,000. What about going to school and working? I did that 30 years ago. And number 3, the credit cards, 15,000. We've got to get rid of those. You've got to start investing. You've got to do online business. There are 2 billion people on the internet. There's different ways to do online. You can open a shop on Amazon or Shopee. You can start a YouTube channel. You could do Facebook, TikTok, and you can do Google. Go and do a blog. The average person is making $3,000 per month off the internet by having an online business. That will hedge you against the dollar because that's $3,000 right there. Look into digital assets. Even though SEC sued XRP, which I've always been saying as a security attorney, I'm saying it again, it was because we owe 32 trillion. Why did big government shut down Silicon Valley? And why did big government sue XRP, Coinbase, and Banaka? Because it's a distraction from what's really going on in the United States. The US dollar is dying and big government doesn't want to know. And they have a digital dollar. The United States now have a digital dollar called Fed now. And that is not Bitcoin. It's not XRP and it's not Ethereum. Stick to these 3. EXRP would have been a lot more had they not been sued by SEC, and they still won. SEC won half and XRP won the other half. XRP was able to prove that it is not a security. As we've been saying, Mr. Gary Gensler, cryptocurrencies are not security. So you need to back away from them. It is hurting the mom and pop consumers. Guys and girls, also invest in the stock market. Here are 5 stocks that you should be looking at. As I know Dave Ramsey said to go ahead and pay off your debt. So I'm saying to you, pay your debt and invest at the same time. That's what I did, and I'm 47 years old. That is what you've got to do. I had one suitcase at 18 years old and I had a lot of debt just like everybody else. You've got to invest and pay debt at the same time. Learn stocks. Here are some good stocks to learn. Apple, Facebook, Microsoft, Google, and Amazon. Those are United States company with billions or trillions in cap rate. People say, oh, I'm afraid of the stock market, but you're not afraid of $32,000 for a car payment. That's a debt. And you're not afraid of $15,000 in credit card debt and $38,000 in student loan debt. You need to start investing in cryptocurrency. Look at Bitcoin, XRP, and Ethereum. These have a lot of market cap. XRP is a legitimate company. I am telling people it's legitimate. You can candlestick it, draft it. It is worth a lot more than 66 cents. It wouldn't have been this low had the lawsuit with SEC not happened. Bitcoin, it's going to bully. Even BlackRock. BlackRock is involved in Bitcoin. So is a bank in England. They're bullish on Bitcoin. You just need Google, a digital wallet, which you can get off the internet, PayPal, Coinbase, and there's so much more. Just Google for one and just hook your bank account to the digital wallet and you could buy Bitcoin for as low as $50. I'm Tisha Paul, my producer.